you have this initial trend that gives you an idea as to when you're watching the list of patterns, you want to know which ones are going to be the strongest to continue the breakout move. That's ultimately what you want to do. So when you're looking at trending patterns, remember I said 6 to 10 bar are trend means the market is trending. However, a 6 bar is considered a weak trend. So although it does get us to, it's the minimum rating you can have to have a trend. So when you're looking and you see a 6 bar, you say, okay, I have a trending pattern, but you know what? It's the lowest rating for trending pattern. A rating of 10 is a strong trend. So again, break down your chart patterns, identify your chart pattern, and say, I have a channel, I have an initial trend that's, or I have a trending pattern. My rating is 6, so that means that I have a trend, but it's weak. Or my rating is 10, so you say to yourself, I have a trend, but again, it's weak. So that's the process you want to go through when you're looking at these trend bar ratings. Next slide we want to look at tells us that a rating of 6 typically means the market is not expected to break through support or resistance. So again, as I said, you have a trending pattern and you come up with a 6 on the initial trend. You look at it and this market looks like it's ready to break out, but in reality a 6 bar may mean again a failure to break out, or it may go through and retrace back down, or it may straddle the support or resistance line. So when you go through your decision process over which trades to pick, and you have a 6 versus an 8 or a 6 versus a 10, and you're looking for a breakout, then you may want to consider looking at the strongest pattern first, if that's the type of trader that you are. If you're the type of trader that's looking for strong breakouts, then always go for the highest rated initial trend, and that should be able to satisfy your trading needs. Typically, when you have the 6 bar rating, as I said, it may mean the market's going to correct, or it could exhaust. So you'll get a breakout, a quick spike through, and it fails to follow through because, frankly, it's just not strong enough to follow through. Traders just were not willing to chase the market higher. When we have this trend of 6 and the market's going up, other clues that may help you realize that the trend may fail will be whether the market's at a major support or a major resistance area. So not only does it have to deal with the upslope or downslope of the trend line, but you also have these horizontal support and resistance points that are stopping the market from moving higher. You also have psychological levels that traders look at, something historical, something in the past that maybe there was a big break and a big breakout level and the market rallied back to it, and people look back and say that's the area where the market collapsed. So that may have some psychological ramifications. We also have, again, former tops and bottoms, which are pretty close to the major support and resistance points. So again, when it gets up there, when you have a weak trend and you're looking for a breakout, don't expect upside momentum. You want to look for breakouts with strong initial trends. And here's an example of a chart. This is a falling wedge pattern. This is how I break it down. I have a falling wedge. I know that's categorized as a trending market. I see that the market has trended nicely. Series of pretty uniform swings. You can see based on this uniformity that we have a high uniformity rating, and that'll be a future webinar on how to read these uniformities. That we had this narrowing of support and resistance, and we expected a breakout. However, we had a 6 bar initial trend rating, so when it did break out, you could see that it hit the target, but it wasn't much of an expansion. And we hit the lower end of the target before the market fell back. Okay, that's because we had a trending market with a weak trend. So that's where you have to become a good trader. You have to watch that momentum on that breakout. You have to know that whether it's the risk reward is good enough for you to take a quick move into this this kind of area. When we're looking at a strong trend, you want to see this situation where we have a 10-bar maximum initial trend. We have a channel down pattern, which is a trending pattern. So we have a trending pattern and a strong trend combined with a 10-bar maximum breakout. So you can see that when this did cross it not only crossed the resistance line here created by AutoChartist, but it also crossed a swing top here and an old top here. So it got it generated enough momentum on those breakouts to trigger an almost vertical move that even exceeded the target zone. So that's a case where strong trending pattern, strong trending market, and strong trending breakout, and that would give you confidence that this market is likely to expand its range. So that's the key. So let's move on to some live action now, so we can look and see what's going on. We have a stock index pattern here, this S&P, or the US 500 on the 240-minute chart. This is a maximum 10-bar rating. This is live data, and you're looking at a maximum 10-bar rating. You've had a channel up pattern, which is a trending pattern. So this is by definition a strong trending pattern. The market broke through the support, and it's approaching our target zone this morning. So that's a pretty good example of what's going on in the marketplace right now. If we move to our Forex markets and we look at patterns right now, we see that the euro dollar Japanese yen, this is a falling wedge pattern. It's categorized as a trending pattern, and we have a low initial trend. So you have a trending pattern with a low initial trend rating. It's actually below 6. So you wouldn't expect, or you would expect this market to run into trouble on the breakout. All right, so that would be one that, okay, we had this confirmation on the breakout, so you have to look at how far this target is. You have to look at this old top here and perhaps a retracement of this high to this low, creating a resistance area in here that may prevent it from hitting the target. And that should be in the back of your mind when you have a low initial trend bar inside of a trending pattern. And finally, we have the euro, US dollar. Although this was a trending pattern, rising wedge, we also had a low initial trend. So you wouldn't expect much of a breakout. But not only did it break out, but it also broke through some former tops before it hit the target. So again, you want to use those things we talked about when you get these patterns. You want to look at old tops, old bottoms, how's it reacting there, as to whether these trend indicators, this initial trend indicator, is going to hurt or help the market's progression. And we have, let's have time for one more slide, and then we'll go into a question and answer period. Here's a pattern where we had a triangle which was non-trending, and the market had a 2-bar rating. So you can see with this low initial trend rating, that even when it broke through, it congested here, failed to reach the target, and then broke out the other way. Now, if you're any kind of trader or have any kind of experience, most likely when you saw this momentum fail, you probably would have covered the trade or at least been out before it broke out. So what you want to pay attention to, though, is you could have avoided this trade completely, because if you see a low initial trend rating on a breakout, you have to keep in the back of your mind that that trade, that momentum may fail, so that you may tighten up your stop earlier than you usually do. What you don't want to do is turn a momentum trade into a swing trade. What that means is if you came to the dance looking for a momentum trade, you want to get out when the momentum changes. You don't want to say, well, if it crosses this top, I'll get out, because what you've done there is you've switched a momentum trade into a swing trade, and in the long run, that screws up your risk-reward ratio and all your trading stats. So always keep that in mind. So finally, we have 2 quick poll questions to end here, and then we'll go into a straight-up question and answer period. And the first question, or the next question, poll question is, the 3 non-trending chart patterns are A, the triangle, B, the falling wedge, C, the pennant, D, the flag, and E, we have the descending triangle. So on the poll questions, you want to tell me what the non-trending chart patterns are. And it doesn't seem to want to be opening here for me. But those are the questions. Maybe we can answer them some other way. Oh, there it is. 94% hit the triangle. That's great. Okay, and our final question is for trending patterns. What are the trending patterns? And the trending pattern choices are up channel, rising wedge, ascending triangle, triangle, and down channel. Okay, those are the questions that we're looking at right now. So what are your trending patterns?